So welcome everybody, here we are live. It is the 22nd of June 2026, 1900 hours right now. So there you go, we started. Thanks Anne, appreciate it. Robert says, we're making pips using the T2B2 for my accounts. Well done Robert, that's what you're supposed to use, I like it. I have for us tonight a very philosophical session, really. Philosophical, mathematical. Not sure what's the difference. A simple truth, really. Simple and philosophical truth, perhaps. And it is what it is, that everything that happens stays happened. Okay? That's the philosophical bit. Everything that happens stays happened. And before you ask, what kind of philosophy is that? Well, it's the only one that truly works, isn't it? Mathematically then, and we are looking at what makes it measurable in order that we can make it manageable, so that we will ideally and indeed measure and manage it, whatever it is. We'll see in a moment. I want us to look at some simple formula for percentages and ratios that we should be using. Hello Judy, hello Claude, good to see you on, and thank you Anne, I get your message there, I appreciate that. So first we're going to look at hold percentage. It's an easy calculation. For example, you deposit, let's say 1,000, be they euros, dollars, grivna, US dollars, Australian dollars, pounds, don't care. And you place X number of trades over a period of X amount of time, and eventually you leave, say, with 1,125, if that's the result as at the time of the calculation. The hold would be, and here's one I prepared for you, you'll like this. You deposit 1,000, your account balance as at after the ups and downs, and your win-loss is 250, giving you a 25% hold percentage. What is acceptable? Well, 1% a day is acceptable. What does that equate to? 1,010. $10 bucks per day gives you 1% per day, and if you do manage to get it to there, I suggest you draw the first 250 and the second, maybe the third and the fourth, so that you are now playing with broker funds going forward. And then as you build it up, let's say you get that up to 2,000 after maybe it's a month, then move that figure into there, and you've withdrawn, remember, move that figure into there so that this becomes your account balance, and then this becomes your plus winnings. Are you with me? Account balance plus winnings. Maybe watch it twice if you need to. And then to get to a win-loss ratio, we can start with a number of winning trades, a number of losing trades, and we end up with a win-loss rate. I'm going to share this spreadsheet in the group later, but just to show you its formula and it works, if I say you've only made 5 losing trades and you made 30 winning trades, or you've made 10 and 10, you can see that it changes there to be, well, it is what it is, you know, that's what it is. There's a 2.5 win-loss ratio or a 71.4% win rate. You can edit these as is on your journal, because in my notes here I've written that, well, let me get to them in a minute. Down here then, look, the reward risk ratio, we've got average win, pips 45, average loss, pips 15, and that gives us a 3-to-1 reward risk ratio. And maybe that's 45 over 25 trades. You can say, I win, I don't know, 10 pips a trade, 4.5 pips a trade, 5 pips per trade. You'll know how many trades you've taken. You'll know what your total number of pips is in wins and in losses. And if we change these numbers, I can put in 25 loss there, and you see the reward risk ratio rises there. You can put in 70 here, and you can see it rises or changes at least there. We leave that at 40, we leave that at 15. And there you go, there's a sensible reward risk ratio there. It's formula driven, so in this column you'll see it's the common denominator type stuffies, and in there it is the formula that drives ratio. So I will share this. You can see I've saved it. It's called Measure and Manage. I'll share it with you guys via the groups later, but it is right there. The win rate, the percentage, that's this one, isn't it? This is your win rate and this is your win-loss ratio, 2.5 there. It's all editable, and it is to be used ideally in conjunction with your journal. I read posts, I read posts. Some traders think that the markets are out to get them. And the thing is, I mean, there's times when you might look at the whole universe and think, well, what about me? And you can, if you're awake and alive, just hear the universe replying, well, what about you? So do it properly and don't skip bits, because we've seen with discipline and with proper effort, we've seen that we can hit the targets. We've seen that we can make the required results, if you like. And then with permission, I do have it, we can hear Anne's Saturday ponderings, which are beautiful, brilliant, and bang on target, bringing me nicely to a Baby Pips post, which we're going to look at in a moment. We just changed the wording there. Baby Pips post analysing one of our more simple strategies, the BRB, which is in the Baby Pips share, the post I put up there. It's absent the good source. It's still delivering 4.8% per month. Now, after I read Anne's post, I'm going to show you that website, and I think you'll understand a lot more then. Okay? The Excuse Factory. It's a remarkably efficient operation. Raw materials go in one end, fear, embarrassment, disappointment, failure. And out of the other end come beautifully packaged explanations designed to protect our self-image. The factory's purpose is not to deceive people, it's to protect our ego. But we shouldn't be too harsh on ourselves. Most of us became customers of the Excuse Factory long before we ever heard its name. Many of us were educated in systems that treated mistakes as something to be avoided rather than explored. A wrong answer earned a red mark. A poor result brought disappointment. Failure became something to fear, so we learned to protect ourselves. We learned to explain, we learned to justify, we learned to find reasons why things weren't really our fault. The habit served a purpose once. For the child trying to avoid embarrassment, criticism or punishment, the Excuse Factory became a place of safety. The problem is that what protects us as children can limit us as adults. Growth eventually asks us to do something different. It asks us to look directly at the mistake, acknowledge it and learn from it. Because if the loss was caused by bad luck, there's nothing to learn. If the failure was somebody else's fault, there's nothing to change. If the problem was the market, the economy, our upbringing, our family, our circumstances, then we can walk away exactly as we arrived, comfortable, protected, unchanged. The difficulty is that growth demands something different. Growth begins with the uncomfortable words, I was wrong. I didn't do the work. I let fear make the decision. I knew better. Those sentences sting, but they contain something that excuses never do. Power. Because the moment we accept responsibility, we gain the ability to improve. The people who grow are not the people who never make mistakes. They're the people willing to look directly at them, without flinching, without blaming, without sending the problem to the Excuse Factory for processing. Our ego wants protection. Growth requires honesty. And somewhere between those two lies progress. Somewhere between those two lies progress. I need a comma, Anne, or I'll miss that next time. So the next time life hands you a disappointment, a setback or a failure, pay attention to the machinery starting up in the background. Listen carefully. You may hear the excuse factory preparing for another shift. If you can, lock the doors, because growth begins the moment the excuse factory closes for the day. Every excuse preserves the trader you were yesterday. Every honest admission helps build the trader you'll become tomorrow. The end. Now, I would love to have someone like James Earl Jones or Morgan Freeman read that out, because in fairness, Anne, it's that worthy. That's really brilliant. It's very beautifully written, as I say, and it's bang on target. And when we bring this in here, look, this is the BRB, Be Right Back, Bollinger Ribbon Bands. The strategy I introduced to you all, I don't remember when, probably earlier this year, I don't know. But this guy, Mafdift, I don't know, he has back tested it. He's ran it through a quantitative engine on MT5. And look, he's written, this is fun to run optimizations with on MT5. Real time and money were put into this development. Don't take a free forum post as cheap. Automation isn't meant to replace manual trading via curve fitting, but discover the range of optimal time frame and optimal risk reward settings for that pair during the time frame to base a strategy around. Now there you go. This gentleman has kindly given us that in 2026 the Dow 1 minute chart, Thursday and Friday from 8 till 11 were seen as the most optimal based on the criteria given. If we scroll up, you'll see I've had interaction. I do reply with people who message and ask about our strategies. I always reply when I get the messages. It's been, see, look at that, 324 views, 4.8% per month, 1.2% per week, 2-to-1 reward risk ratio. I mean, what more needs saying? It isn't the strategy, ladies and gentlemen. It never is. It never was. It's a result of the excuse factory, as so beautifully written by Anne. Again, I'm going to make this spreadsheet available. Don't edit this bit. It is just, you know, the general common denominator. Don't edit the formula in there, because it is, as you can see, formula, and these are just formula. But do by all means add this onto the end or the side or somewhere safe on your journal. On the end of your journal, your trading journal, and maybe after a week, maybe after a day, maybe after a trading session, fill in the numbers. How many trades did you place? How many were winning? How many were losing? What was your average win? You know how easy that is to calculate. You placed 10 trades, 5 of them were wins, and they won 10 pips each. Well, okay. Your average win, I've forgotten what the numbers were, I've given already now, but it's very easy to calculate the average win in pips and the average loss in pips. Add up all your losers and divide how many trades were losers. Add up all your winning pips and divide them by how many winning trades you took. Very, very simple. Key it into here, you'll end up with a reward risk ratio. These formulas, and you'll note I've saved the spreadsheet as measure and manage, and I would like those of you who aren't at the moment, do add this on to your journal. Wherever you record your trades, have an extra paragraph. You see it's sheet 1, you can go click and have another sheet, and I'll just delete that one, but you can have another sheet and just post this on it or paste this into it and fill in the numbers. You know what your deposit was or your current account balance, and then what your win is for the day, the week, the whatever it is, however often you record those results. It is well worth doing, I promise you. I'm not going to save it, whatever it was in terms of details in there. It will come to you with the numbers that I populated earlier. And there you go. There's nothing on strategy today. We're looking at the dynamic edge, the DT2, the whatever it is you remember that strategy by, the DWL3 maybe, I don't know. But if I quickly go and add, because now I've got to, haven't I? I've got to. I'm going to go Dow. I'm going to go 1 minute. I'm going to go bars. And I'm going to right click. I actually can't do that because there is, you know, I said without the source. This strategy comes without source. I was just going to put the BRB on there, but the BRB on my system has the source. So I think we'll forget about that for now, and we'll just go back to the DWL3, DT2, Dynamic Edge, whatever you want to call it. We're 15.5 minutes in. Questions, anybody, everybody, please feel free to ask any questions on journaling, your risk-reward ratio, your win rate, your win-loss ratio, your hold percentage, or indeed ask something about the excuses that we make, because we do make them, you know. We shouldn't, but we do. In the absence of questions, I'll prep notes for next week already. All good, says Claude. Super duper. Page down. I'm going to have a look at what is the date. Anne's writing. It is Scott. Yeah, I'm glad you said it. I'm glad someone else said it. Because, yeah, Mary, I'm going to drop it into the chat. Anne's written that absolutely beautiful and very helpful. It's not the first time she's written something for us. But I think you should consider a book, Anne. I really do. It is worthy, absolutely worthy, and you certainly get my vote. I'd buy it. Or if you want, what I might do is bug you for, what's the word? What is the word I'm looking for? You know the way I wrote the trading code 2, 3, 4, 5. It's in TDX Social for you, Judy. It's right there. There you go. Anne's considering it. Happy days. I don't need worry then. But yeah, Judy, it's in TDX Social. You will find it. I hope you'll find it. There's no excuse not to. But, well, I don't know. There's the excuse factory kicking in again, isn't there? You know what? Someone will say that not only they didn't see it, they couldn't find it. At least you're going to go and look for it, Judy. I know you'll find it. Alrighty, everybody, I'm going to end the recording right there and get it uploaded. I appreciate you all joining me. Thank you. We've we got 20 odd people on today, so thanks for that. Appreciate you being there. Please feel free when it's up on YouTube to give it a like or a share or something. I have about 3 videos up that have got dislikes, wouldn't you know? But it is what it is. Hi, Rosa. It's good to see it on there. Thanks for being here. But the more times you like it, the more their dislikes will pale into insignificance. And I hope the session was useful. As always, I'm available for questions in or out of the sessions. You know where to find me. Thanks, everybody. Trade safe, and I'll see you in the morning for the live DAX. Thanks all. Bye-bye.